Thank you, everyone, for joining. For those who I haven't met yet, I'm Paula, and I'm part of the Issuer Success team here at Net Capital. And today's class is going to be about what they don't tell you about raising capital online until it's too late. And we're joined by Jose, founder of Space Funding. And Space Funding has helped founders raise over $85 million across more than 350 clients by simplifying fundraising into a process as intuitive as e-commerce, while ensuring that they keep 100% ownership of your data, that you keep 100% ownership of your data. Also, Jose and his team have a very exciting offer for Net Capital issuers that I'll let him share during the presentation. And then just a few housekeeping items before we get started. The event is going to be recorded, and we'll be sharing it along with any issuers who are not able to make it today. We'll also distribute Jose's contact information along with more information about Space Funding and how they can help you. And if you have any questions during the event, feel free to drop them in the chat or in the Q&A feature, and we'll get to them as soon as we can. And with that, Jose, I'll let you take it from here.
Thank you for the introduction, Paula. So hi, everyone. Excited to be talking a little bit more about what we do and what we have been doing for the past few years. So that way you can get as much information as possible and take it for your race. So I want to keep this short because I know how valuable your time is. So I'm going to try to do around 10, 15, maximum 20 minutes. So spare with me. It's going to be very little education about the market, how we got where we are. So that way you also get some good news about how the market is progressing. And then at the end, we're gonna have some time for any questions that you guys might have, and then of course focus on strategy. So that way you guys can take a lot of valuable information. And at the end of the webinar, we'll have a special offer for all of you guys just for making it through. So let's get started. I actually put together a small presentation. So let me just click share, and there we go. Okay, Paula, can you confirm that you guys can see my presentation?
Yes, confirmed.
Amazing. Let's get started. Okay, so thank you so much, Net Capital, for having us another time. So on this topic, we would really want to focus on actually getting you up to 6 figures and beyond 6 figures, so you understand the different strategies that you should be following, and really trying to understand why most founders fail and how they're able to raise big amounts of capital and what success looks like in this kind of market. So what we're going to be talking is converting capital raising to simple e-commerce. That's our main area of expertise, and we make investing in private markets as easy as online shopping. So we're going to walk you through the main strategy in a second. But in the beginning, this is kind of what we're going to be talking about: capital raising, what it means nowadays, the strategy, that's going to be the majority of the part, red flags, and the next steps. So if you guys are interested on learning a little bit more about how we can collaborate together, that you guys will have a bit more information at the end. So what is online capital raising? So raising money online for a business, a startup, or a project by using a digital platform. So you usually have to use a company like Net Capital because they make it extremely easy for you to start raising capital with a very small investment. Because of course you're selling securities, you're not selling a product, so you have to make sure that you are following the law, and you are following the instructions done by FINRA and the CC. So you want to make sure that you're using a platform like Net Capital, because these help companies find investors through methods like crowdfunding, selling equity, offering debt, or anything similar to it. So a little bit about the markets you probably know, but Jumpstart or Business Startups was approved by Obama in 2012, and these allowed retail investors, accredited investors, to raise capital for startups. So startups raise capital directly from investors, from retail, accredited, or higher institutional in 3 different ways. So you have Reg D, Reg CF, which is the main place that we're going to focus on this call, and then Reg E Plus. So Reg CF, you can raise up to $5 million, and a few years ago, it was 1.07, and now they're having discussions to increase it to 10, maybe $20 million. It will be probably something in the middle, but those are great news because it's just getting easier and easier to raise capital online and to actually allow retail investors that they were including in this market to participate in these rounds. So a little bit about how quickly the market is growing. So this is in general with regulation, crowdfunding, Reg Plus, and Reg D. But as you see, it has been a very big increase from 2016 to 2021. And if you check data from 2024, it's actually above the $20 billion raise. So the future of fundraising is here and it's online. I'm showing you some of the biggest online capital raises that have happened in the past 2, like this year, last year, and 3 years and around. So Mr. Robotics, Energy X, Red AI, Boxable, they didn't only raise so much capital from so many investors, they actually built a massive brand, and they were able to scale so quickly by actually leveraging the techniques and the methods that we are about to show you. So they didn't only secure capital, they created a massive community and also generated hundreds of sales or sponsorships, really depending, of course, on what niche your product is. But this is a very big hack that I will walk you on what we call capital stacking, which is the best way to raise capital nowadays. So let's talk about strategy. Now that you know a little bit about the market, why most founders struggle with online fundraising. So the problem that we usually see are 5 different topics. So you either build it and you expect people to come. You don't either have an investor journey or really set up a strategy. You're not using your network because people are just trying to find investors from weird places, in a sense, like they're trying to probably go to group chats, trying to really call out rich investors. But the best way is to actually go from a cold email to warm, and then when they are warm, when you warm them up, they will end up becoming investors. And then I'm mistaking is that traffic is equal traction. That's not. You really want to have clear KPIs, which I will give it to you at the end of the call as well. And then you don't have a pre-launch, so you just click launch because you're ready to raise, but you didn't really have a strategy. So I'm going to walk you through what we do and what we recommend you doing. So the fundraising playbook, and that what we do and what we see to work over and over for any startup, is to actually focus on the pre-launch. But if you're live, you can still do this. So build a pre-launch email list of investors. So if you're live, build up an email list of investors that are focused on your target. They can be retail, they can be accredited, but you want to focus before you cross 6 figures. You want to focus on the strategy. You want to focus on what you have, so any followers on LinkedIn, any followers on social media, any databases, any community, any warm connections, any one in your close circles who might be interested in investing. I see a lot of founders that are hesitant about doing these activities, but those are the ones that are really going to push your raise, get the momentum that you need, and then keep doing other strategies, which I will walk you in a second, so you can get to mid 6 figures, 7 figures, and even 8 figures. So you want to hit 25% of your funding goal when you launch. That's what we recommend. The main reason is just doing a strong pre-launch and really having people secure the funding before you launch. So how you can do that is through a form, just asking people, having a commitment before you launch. If you launch, that's totally fine as well. Just keep pushing about getting these goals so you can start getting momentum before you do other sort of activities, which I will walk you in a second. So, and then you want to use that momentum to keep raising a lot more. So if you see any company going public, you see them sharing great news about their company all the time. And then if you see them, someone is sharing negative news, that usually reflects on their stock price, and then the company goes down. So it's a very similar strategy. You want to, of course, focus on the good, not on the bad. You want to be open and you want to be transparent with investors. That's very important. But you want to focus on the good and share them your vision and what you're all about. So the most important part, the first 25 to 50K is the hardest, and why pre-launch is everything and how momentum builds your raise. So step 1, you want to focus on your warm network. So that means your family, friends, anyone who might be close to people that you know. If they can do some introductions, that's great. And we actually have a lot of templates that we can share with you, not only for, so I used to work at a VC in Boston. So a lot of the things that we would do is actually get warm connections from other VCs or other angel groups or angel investors. So you might have connections that have access to those people. So give it a try, then the step 2, you want to focus on your inner circle, your community, who is close to you. After that, that's when you want to start thinking about, okay, let's have a public launch, because I'm going to let my community invest. I'm going to let, if you don't have a community, maybe all your social followers, find a way to reach out to them directly. And then once you have done all of these, that's when you start scaling. Okay. So raising capital, the problem that I have seen over and over after helping so many people raise capital is founders and CEOs, they put the whole company on hold just to raise capital, So what we did, in my experience before I worked at a VC, is through commerce. So we try to scale companies while sleeping, through different methods, which I will walk in a second. So you want to be doing the same. So you want to be increasing your company awareness, traffic, brand, all while raising capital, but without having to put your main job as a CEO and founder on hold. You know, you want to be raising capital, but you have a company to run. So actually do both at the same time and try to automatize the, the capital section part. Of course, that's one of the hardest, to automatize it as much as you can. Of course, for big investors, even medium-sized tickets, you should try to jump on calls with them or have someone from your team to jump on calls with them if they have questions and they're interested on investing a bigger ticket size. But really focus on doing both at the same time, and that's what we focus on and really help founders and CEOs and companies really succeed at. So what we feel like is you have to build a growth engine while you're raising capital, so that way you're getting brand awareness. So with our tech, you own 100% of your data, so you're growing your social media followers, you're growing your databases, you're growing your community in general, and people start to learn more about you. So you're getting free marketing in a sense. You want to maximize your return on investment. So what I mean by that is your investors, they're not just investing on you, you know, they're becoming brand ambassadors. So these people might tell other people, they might become your customers, they might become your most loyal customers, and the lifetime value will go highly, depending, of course, of your niche, but really focus on maximizing your return on investment. And then you want to be doing all of these while raising long-term capital. So that way it's just not capital, it's a way to build a community of people that really care about you. And I'm going to show you what I feel after working in the capital markets for almost the past 5 years. I'm going to walk you exactly what I think the biggest hack for the next 5 years is going to be about capital raising, which is called capital stacking. So pretty much you're doing several ways to raise capital and you're getting the best deal out of it. So you're not only trying to raise capital from VCs, because sometimes their terms, or most of the time, their terms are not the best that you can get. So how do we do this? So how do we do a growth star engine? So pretty much you want to do organic and you want to do paid media. Okay. So the paid media, I recommended doing it slowly because you don't want to burn a lot of cash right away. So you want to be generating traffic depending on what your niche is. So if you can create great hooks, if you can get people excited very quickly, maybe Meta is the best one. If actually by trying to search for direct keywords, let's say your company is a lithium company, you know, like Energy X, they raised over almost $80 million on their Series A. So the keywords was very, very effective for them. You know, if you're Boxable and you have great content, they raise $150 million. Meta was a great way for them to captivate investors. And then of course they use many other platforms, you know, but find the platform that works best for you in the beginning. Really have clear KPIs. So traffic is a vanity metric. You really don't care about traffic. What you care about is growing your list, you know, growing your email list, because those leads, they can then become customers. So you are kind of hacking the capital raising right there, because you're getting their information while trying to convince them to become what I like to see retail investors, which are brand ambassadors, and then get their capital to invest in your company, of course. So the way that we do it is we build a modern investor funnel. So it's kind of like the commerce play that I was talking about. So you can own 100% of your data. We do that through our tech. So it also has a CRM included into it. And then we create the whole e-commerce play. So that way, when you're buying your favorite product online, you leave your information. If you use a platform like Shopify or anything similar, you're collecting the data, you're collecting through Pixel or any API KPIs, you are collecting, you're following where those investors are going, you know, so you're collecting 100% of your data, which you can use through retargeting, sending emails, and then really educate them on why they should invest. Because people will not invest on you right away. They probably have to get between 7 to 11 touches before they actually invest on you. That's why it's so important to build a brand, not just try to raise capital. So something that is I always suggest, and it's very, very important, is about testing and market validation. Don't just launch a few assets and ads creatives, just test a lot of different variations, because you will never know what people are looking into. So try different hooks, try different creatives, test and validate how much you can raise through our investor funnel. And then 4 key points to identify and track. So these are the KPIs that I was talking about. So you want to predict and calculate how much you can raise, plus what your funding goals should be. So once you have spent a decent amount, just make sure that you're tracking everything, you know, understand, okay, if I invest $5,000, am I getting $10,000 in return, but I'm getting free marketing? okay, that's all right. Nothing special. But if I'm investing $5,000 and I'm getting 50, okay, now we're talking, So just make sure you have clear return on investment and return on ad spend so you can understand and make the right decisions. Then you want to discover your investor position. So this is where the fun starts. So once you know who your ideal investor profile is and how they look like, it's very easy to scale. That's where you go from low six figures or six figures to 7 and even 8 figures very quickly, because you want to find where your crowds are. You want to find where people who love your niche are hiding, and then going into those crowds. And then you want to determine your valuation, the money you get with it. But this depends if you have already launched your campaign or not. So this is exactly what I was talking about. So capital stacking, your most powerful strategy. So what I mean by that is, you nowadays, in the past, it was all about VCs, or there weren't so many VCs, and you would go to angels, then VCs once you had traction, but they were much more willing to invest bigger ticket sizes. Now they ask for a lot of traction, which is normal because the VC market is adapting to how the world is shifting. But what I see working the best for the best companies is you want to do a mix of things. So you want to do retail capital, which you usually get the best terms, and you're actually able to hold more of your company, more of the voting rights. And I don't usually see founders getting screwed that much. And I see companies, and the data is there. You can go to a company called King's Crowd, and you can check that companies that actually raise capital through retail investors, they last much longer, and they usually end up in a much better place in general. So that the ones that don't. Then you want to raise capital from venture capitals if you want. Of course, this is not necessary if you get the right terms, if the VCs are actually strategic investors, and if they're going to help you somehow. And then you want to use debt, strategic capital, to grow without dilution, which usually comes with some sort of traction, or actually being able to prove that you have some numbers. And then out of all of these, of course, in the beginning, as I recommended, use your close networks, angel investors, angel groups, which are much easier to convince than going to VCs directly. So that's what I recommend doing nowadays. This was an image that kind of explains what I'm explaining on the left side. So what you have to watch out for in this market. So the red flags, the 3 biggest mistakes that I see founders make and how to avoid them is agencies that promise ads, but ignore the funnel. So you can be doing call outreach, which is good, because it can be very cost effective. Of course, you have to have good databases, So if people have cold databases, they don't usually perform very well. You want to make sure that you're spending money on PitchBook, Crunchbase. So if you have someone that has access to these softwares, we actually spend a lot of money every year on getting access to them. So that way we can have good data that we can use for our clients. So you want to be making sure that you're looking into the right investor. Otherwise you're wasting a lot of time. They're probably not going to answer. So just make sure that you are filtering a lot when you're targeting angel, VCs, family offices, or anyone who might be interested in your niche. Then be careful about those companies that don't guarantee any data, because then you can walk away having spent a big amount of money, and then you don't get anything in exchange. So just make sure that you're always collecting 100% of the data. So that way you're growing your brand, you're growing your company, which is the main point while you're raising capital, and not knowing your ideal customer profile or ideal investor profile, which is very important, or not having had past experience into those markets, And then a small bonus, I don't see this regularly, but think that you're in a very regulated market. FINRA is very protected with investors, which makes total sense, and that's the way to go. So ignoring compliance until it's too late. So just make sure that you're doing things right since the beginning, so that way you can avoid any trouble later on. Because I've seen clients who weren't clients at that time getting screwed, and then working with us and explaining us what has happened. And it's very important to make sure that you're following the right communication, and that you're following the right strategy in general. So a little bit about us. I walk you through the strategy. I walk you a little bit about the past history of this market, and Paula will share with you after the call a link to a few videos that are extremely helpful for educational purposes. That way you can also join our newsletters and can learn more about how we can help you. We just generate a lot of educational content for free, so you never have to pay. So no worries about that. And then if you're interested, I will explain you the special offer that I have for all of you for this month. So what we focus on is on the investor acquisition. So we are on a mission by 2030 to actually raise $1 billion for 1,000 founders. At this point, we're a little over 350. We have done a bit over 50,000 investments globally. So that means retail, angels, and have also created a lot of interest of much bigger investments that didn't actually invested with us, which could have potentially invested. And then we have raised $85 million for our clients, and those clients have actually gone and raised over $210 million right after those rounds. So they were able to scale very quickly after working with us because of the three angles that we take, as explained previously. So a few of the companies that we have worked with, many more raises, but these are some in the 6, 7, and 8 figures, very different niches. So that way you guys can take a good look at and then how we look, like how working with us look like. So we build everything from the service side to the tech. So we have an investor funnel, a CRM, an email software. We do the paid advertisement, the A/B testing, and the report and tracking on a weekly basis. And kind of like our tech looks like the image on the right. So that's actually taken directly from our image. And then what we really try to do and what we really try to help you understand is that every raise gets easier the more data you have. So we try to understand investor acquisition and their behavior better than ever before. How? With clear KPIs and making sure that we take 100% of the data. So that way, through our analytics, we can understand the investor behavior, their acquisition, so the payment characteristics. So we use softwares that can check the credit score to actually know if having a higher credit score means having more responsibility as an investor, which means in a bigger ticket size. So just really thinking about putting yourself on the investor's shoes. The demographic information, so which cities, which countries, which locations in the world might be better fit depending on your niche. And then marketing attribution, so choosing the right channels, etc. So just to go quickly about it, understand your investors. Just make sure that we have very good ways to track everything. Learn what actually works and doesn't, so that way you can scale what works and stop doing what doesn't. And then retargeting your strongest leads. So what we do, and this is all through our tech, rank abandoned shopping carts using powerful machine learning that allow us to retarget these people, really grow your databases, educate them and nurture them through educational content that we also create to make sure that they understand why investing in your company is a good thing for them and why they should do so. So that's pretty much it. I think I had one more slide. Let me just focus. So this is a quote that I love from Walt Disney. The way to get started is to quit talking and begin doing. And I think, yeah, this is it. So pretty much the offer that I have, as explained for Laura, is I will send you a link where you can start getting a lot of educational content from us. And that way you can implement everything yourself. This is a little bit more information about us. You can reach out directly to me. So hosted at Space Fund in the US, to my team member, who takes a bit more of lead on the sales department, which is Manu, that is Space Fund in the US. And then you can track our website. But pretty much we have an offer for all of you guys, which is 50% of all our services. So that way you can give us a test. You can work with us without having to spend a lot of money. We can really see if we are the right partner with you. If after that month it works out, then we can go back to our normal fees, which we do these in very exceptional occasions, but we want to offer to you for this time as a thank you for attending to the webinar. So now I'm going to stop presenting and I'm going to try to answer any questions that you guys might have.
Thank you, Jose. That was great. As the questions start coming in, I do have a couple of questions. So the first one is, we get this a lot, that people have already exhausted friends and family, don't have too many investors in their network. How would you recommend that they start building that investor list if they're very early in the process, maybe are very idea stage, or just starting to get an MVP? What are your thoughts there?
Great question. So in that case, what you want to be doing is building traction. So what I mean by traction is building an email list, building people that might be interested in your product, because you might not have to really spend money on building or finalizing your MVP, but at least showing some sort of traction. And then you want to go to early investors. Who are early investors? Or small angel groups. Yes, really check your market. So angel investors who might have invested in similar niches. Angel investors are usually much more comfortable taking more risk, but of course they will ask for more in exchange, because if you don't have traction, your valuation should be much lower, just because you haven't proved that you can get where you should be. But just really focus on color reach in the beginning, really get those emails, those databases, connect them through email, connect them through LinkedIn. Try to make the emails very personalized. So feel free to shoot me an email to me or to Manu at Space Fund in the US, and I will send you some templates that work very, very, very well. But just personalize them, because the problem that I see a lot of founders making is they just send a lot of emails and a lot of LinkedIn connections without trying to personalize each one of them for every investor. So I also do angel investors. I do it on companies that are profitable, because I really like to see product market fit before I put any money on those companies. So I get a lot of deal flow. So I probably get 10 LinkedIn connections and 5, 10 emails, and I don't check them, So either you have a great hook and you're telling me something about myself that makes pop up, or I will probably not even read it. So really focus on personalizing each one of them if you don't really have a network, and make noise. Once you start making noise, you will attract the right people.
Love it. We did have a question come in that says, if we have a list of investors but don't have permission to market to them, where do you come in? I'm not sure what the person's meaning, as in they can't market to them, but just to be clear, when you're sending out emails, they're coming as if it was the company reaching out, right? It's not Space Funding reaching out to these investors. It would be
Correct.
the independent company reaching out.
Correct, which I also recommend depending on the size, and how many people they're reaching out. I usually recommend getting a subdomain, so that way they're not hurting their main domain, depending on the size, of course. And then we use a lot of lookalike audiences. So if you have any email list that we can use, we can retarget those people through ads. So that's another way. Of course, email, and there are other strategies that also work. But yeah, just always make sure that what you're doing is following the right methods, and most importantly, just have clear KPIs. So if you have 10,000 people, but you're only reaching out to 100, or only 100 of them are actually seeing your email, there is no point to like really focus on that, because you're probably not going to get a lot of good results. So make sure that you have clear KPIs to generate good results.
Love it. Okay. And you did mention a bit of the ICP, which I think you meant ideal customer profile. Is that correct?
Yeah.
So what are some good ways to identify those
So,
ICPs for this type of raise? So for equity crowdfunding?
Absolutely. So great question. So where you want to focus is where your crowd is, so really think about your niche. I'll put a few examples, but if it's in sustainability or you are a clean tech companies, just focus on finding the right group chats. And what I mean by that is like the right demographics, the right locations. So they might be in bigger cities, just really trying to understand who they really are. So for example, this past year, we have been extremely successful in football races. We did a little bit over $50 million, almost $20 million in total, for all the football clubs that we work with. So the main reason was because we really understood how to find these people. So what we did is we went for football fanatics, people who were interested in investing in a bit of a riskier asset, as private markets are. And we went all in, so like not only in the US, which is our main focus, but also in Europe and in other places around the world. So that really allowed us to scale very quickly for those football clubs, which were Watford, Caledonian Braves, Enki Tabor, and so on. So really find your crowd. That's what I would say. And then you have, of course, so many social media platforms to actually do so. So figure out where your crowd is, because Twitter is much more different. If you're a crypto project, for example, it's very different than Meta. Meta is more about hooks, really grabbing their attention very quickly. So understanding each platform instead of just trying to run ads everywhere. And then once you do that exercise, go ahead and launch.
Jose, I see another question. I think maybe it'd be worth you explaining a bit more of your services, because when someone's saying it feels like knocking on the doors to ask you to knock on the door. So can you explain more what Space Funding does and how you're addressing issuers' necessities and problems?
Absolutely. So we have two strategies. The main one is by converting capital raising into simple e-commerce. So we actually build it from scratch. So we create investor funnel. We explain since the beginning why people should invest in your company. So the same way why people convince you to buy the product online, the same exact strategy. The main thing is we actually collect their information since the beginning, so that way you can grow your database. And for us and for you, that way is much cheaper to raise capital, because you're sending them emails and they're understanding why they should know more about your company and why they should invest in your company. Because remember that it really depends on the race, but usually people have to see around 7 to 11 touches if they haven't. What I mean by touches is to see or hear news from you before they even invest, So if they don't know anything about you, there is a lot of educational process. It's the same way that if you learn about us right now, you will probably not trust me right away. So if you want to learn a bit more about us, that's why we focus so much on educational content, and we try to do a lot of things to help founders raise capital, because that might help them want to work with us, So it's the same strategy. And then call outreach. So pretty much what we do is we have the softwares that we spend the money on every year, and then just directly do call outreach for you. So we create databases of who we think might be an ideal investor profile for you, and then really scale through email and LinkedIn. So the connection of both is what makes a raise very successful.
Perfect. This might be a bit repetitive, but you did mention that 25% of your raise is crucial and super important to have before you actually go live. What have you been seeing work best? I know having people warmed up, but is there anything else that you can think of that will help your chances? Maybe something in the offering page, maybe it's something that you're sending in the emails, but what can you give people for maybe not the 25%, but maybe the first 25 to 50K investments?
Great question. So what I would say is it's all about the perks, that you can also provide retail investors, because the main reason, for example, that someone might invest $100 instead of $1,000 is because of your perks, or the decrease that they can get in your shares. So really brainstorm about what you can provide them in terms of value as well, not only in shares of your company, but what you can do for them. It can be very simple. So for example, for those races that I was talking in the past, the football ones, depending on how much they would invest, they would get VIP tickets X amount of times a year. They would get a free merchandise, or like jerseys or other things from the club. And then if you go to the higher ends, they would get like box offices. They would be able to go to the club whenever they feel. Maybe they would get their names on the seats. So really playing around with different ideas on how you can provide value to them as well.
Perfect. I see a question about fees and potentially getting them on the back end. I'm not sure if that's something that you want to discuss now. If you want to set up a call with the issuer in particular and address that on a call, let me know.
Yeah, so pretty much happy to feel free to send us an email, and we will answer those questions. But we do not work that way. The main reason is because there's a lot of work that we will have to do from the start to the end, and then it's a little bit tricky in terms of FINRA. So we try to follow the regulations in the market very strictly. So happy to see anything that can work out, that we can make work out, or if not, more than happy to provide you templates and resources for free. But yeah, just send us an email. I'm more than happy to help you in any way that we can.
I'll make an introduction. And then the last question I have is, the answer can be no, but have you found any tools that can help you predict how much a person can raise based on the traffic that they have, or some type of conversion before they actually go live, or maybe even while they're live, like the chances of a campaign being successful?
Very, very, very good question. And we try to answer that, but for every race is different. So like, I want to say it depends. And now I'm just going to try to give you from past data what I think could be an estimate. So for example, when you will go to e-commerce, you will see that people will convert between 3 to 5% on average, really depending, of course, how good your offer, your product, and your content was. And then, of course, from there, you could really increase it, maybe even lower if your offering wasn't good. I was talking on average on e-commerce. So for investors, it's actually lower. So you have to make sure how good is your email list, your open rate. Are they actually clicking? Are they actually being interactive? So if it's good, you could predict anything from, I'm talking about emails, from a similar rate, but of course you have to be making sure that everything is good. So the content, everything that you have set up, so the open rate, the click-through rate, the whole investor journey, the way I like to call it. So from the first time they see you all the way to when they invest, how long does it take? So it's hard to give numbers. So that's why we also do a lot of retargeting to past investors in similar niches, because they are more comfortable investing in your companies or checking people with high credit scores, because they usually are much more comfortable taking this kind of risk. So these are things that we can do through paid ads or through the machine learning that we use in terms for the algorithm for social media platforms. But around, if you do a very good job, you can see anything from 2 to 5% and even higher.
Got it. And my last question is going to be about live offerings. So I think we focus a lot on what people can do before they go live. For companies that are already live and stalling, what would be your main recommendation?
So I would say it's the same. It really doesn't matter that you are live, because if you haven't raised much, people don't really know, because you have probably haven't made enough noise. And that's why do not focus on traffic, focus on quality traffic, So quality will always beat quantity in a sense. So just focus on finding the right quality of crowds that might be interested. And if you are not already at 6 figures and you're just trying to get that 25, 50K that we talk about, really focus on following the steps that I mentioned, those 4 strategies, and merely those. So like focus on color reach, focus on work connections, focus on what you can control, which is around your circles.
Awesome. Perfect. Well, I think we don't have any questions so far. So I'll start wrapping up, and I'll obviously make introductions to everyone who has put questions in the box, and I'll forward any introductions your way. But thank you everyone for coming. I'll be sending over this recording in my follow-up email with more information about space funding and the link that Jose shared about the 50% off. I definitely encourage you to take advantage of that deal, and or set up a call with Jose and his team and just get some more insight from him. We'll also be hosting a few other events in the following weeks similar to this, so stay tuned for more information. And if there are any topics that you would like us to discuss or cover in the next event, you can reach out to me or Troy. We'd love to hear from you all. And thank you so much, Jose.
Absolutely.
It's a
Thank
pleasure
you
having
guys.
you again.
Have a great day. We'll talk soon. Bye bye.
Bye bye.